All I can say is that investments in gold have done much better than in government bonds.
Well, that's where we wanted to go, because this is something that you can all agree on, deflation or inflation, right?
Well, I mean, we don't agree about that because a lot of people think that gold is a bubble and so forth, but that's not my impression. I want just to tell you, I was last week in Taiwan, and later I was in South Korea. And I gave at 2 conferences presentations, and then I asked the audience, by the way, of you, how many of you do own some gold? And in Taiwan, I think there was 1 participant that owned any gold, and in Korea, in a room with maybe 1,000 people, not a single person owned gold. But you understand, had I asked the question in year 2000, how many of you own the Yahoo type of stocks, high-tech stocks, the whole room would have said, yes, we own them.
So that was a buy signal for you, right? That means no bubble.
Well, I don't think it's a bubble, but I have written about this. We had a huge move, and we peaked out on September 6th at $1,921 per ounce, and I still think we are in a correction phase.
Is that what you see, Mark? Because you haven't seen, I meant to ask you, gold has not been acting very well lately, even though you would think maybe some would argue investors would be making moves into the metal as a safe haven given the intense market uncertainty and volatility. But explain what you're seeing in gold right now.
I want to explain to you one thing. Globally, liquidity is like an accordion. It expands and contracts. And recently it's been contracting, and that is why the dollar is strong. Whenever global liquidity contracts, the dollar is strong, like in 2008. And that is a period that is bad for asset prices. Now people say, okay, gold is not acting well. Yes, we are down 12% from the peak, but we're up 20% this year. That would seem to me to be better than most stock markets that are down 20% this year.